Alright, what's up, everyone? So, in this episode, I think I'm going to be covering a proper strategy or plan that I plan to be adopting together with my private group. I think the private group is going to be my main emphasis going forward. Now, I'm going to be also creating content for folks who are kind of sitting at the sidelines, wondering what they should do. And I think at the end of the day, everybody deserves an opportunity to kind of have a plan, right? And sometimes the best way to deliver a plan these days is through YouTube. So those who are watching my channel, thank you so much for the support that you've provided so far. I know that it's currently really tough times and everybody's probably running around just buying supplies, focusing on keeping yourself and your family healthy. Try to stay indoors, obviously. Build a strong immune system, eat healthy, stay healthy, work out at home if you have to, and obviously continue to improve yourself. If you have the opportunity to work from home, do the best work that you can, deliver the best value for your company and clients, and obviously, I think the next 24 months is gonna present itself as one of the best opportunities in the market right now, hands down, for you to really turn a profit or actually improve your lifestyle going forward, especially if you have the ability to do so. So right now, I ask myself, if I rewind back 10 years ago to the date when it was the subprime, Lehman Brothers, what kind of things that I would have done differently? Obviously I was a noob at the time. I just left my membership consultant job, right? I was actually selling gym memberships at a local gym. And at the time, obviously, I was wondering to myself what was happening around me, because clients gym goers who were also private bankers, they were coming in, they were concerned about the market. One private banker was saying, wow, the Hang Seng just dropped X amount of points. I couldn't remember at the time. And what was exactly the Hang Seng? Of course, I later knew that the Hang Seng was actually the Hong Kong stock market, which was obviously more liquid, had more volume and larger market cap compared to Singapore. And at that time, I think Hong Kong wasn't even merged with China at the time. So I was completely clueless. I didn't know how to identify opportunities. Obviously, I was just in my own little world. But now, with the amount of experience and knowledge that I have, what would I have done differently? So I'm going to be sharing that plan with you, right? So that you can have a rough idea how you can structure a portfolio for yourself. And I think structuring a portfolio firstly, you have to identify your risk profile. At the same time, after identifying a risk profile, you need to identify your financial situation, whether you can or cannot do this. Because although the opportunity presents itself, it requires a time horizon, and that's what most people cannot do, right? Right now, if you notice, if companies are not well capitalized, or if you lost your job and you don't have emergency funds, am I right to say that you will start to lose the assets that you hold most dear? Your home, your car. Potentially, these are things that are the most important and is like a necessity in certain rights, or at least in most people's lifestyle. Then obviously the ability to even buy food for yourself or your family. This all becomes a concern. So right now, good morning, Corey. So right now, I kind of want to iron all that out, put it into a proper video, right? I won't know how long this video is going to be, guys. So I think it's really going to be for the mature audience. I wouldn't say that it's for everybody, because investing and taking on market risk is clearly not for everyone. There is going to be a tumultuous, volatile period in the next 24 to 36 months, even 48 months. It is that time. Shit has just hit the fan. It's not going to turn over as quickly, but I want everybody to be as prepared as possible. So apparently, based on the yesterday's video, there were certain people who were commenting that they couldn't really understand me. Maybe I was speaking a little bit too quickly. Maybe because I'm not from the US, I don't have a certain slang to it. I have my own tone. So let's probably kind of break it down, okay, for you guys in very same plain simple English. So in the next 24 months, this is what I plan to do. Now, before I share that strategy with you, I need to let people know what kind of risk profile they probably fall into. Now, the first category is the low risk investors, or basically very passive, they are risk averse individuals, right? So these are the so-called conservative investors. So you are someone who prefers holding cash. You take comfort in holding cash rather than putting your money into the market. Most of the time, you are more involved in money market related products. For example, fixed deposits that are giving you 1% to 2% per annum, and that's just about it. You are not interested. You prefer principal to capital guaranteed products. Now, obviously, this term cannot be loosely used because principal and capital protected are guaranteed principal protection are basically only for banks that are able to kind of say that, okay, we are insuring your deposits with us, right? Very rarely private companies will have the ability to do that. Okay, very, very, very seldom. In fact, you should never believe when a private company says that this is principal to capital guaranteed. That is absolute bullshit, because no one is going to bail them out in the event there is a market downturn. They are most likely going to run away with your funds. So do not believe that. In fact, these days, I don't even believe there's such thing, even if it's from the banks. I really cannot trust all these kind of stuff. So principal and capital guaranteed, usually I avoid such products. It doesn't exist in my mind. Okay, now this is just folks who are in the conservative category. Now, the next category of investor or risk profile is the moderate investor. Now, moderate investors, now we are not covering age yet. Okay, we're not covering age yet. You can be any age and be in any of these risk profiles, because as your requirements, your lifestyle, as you progress and you get older in life, obviously your priorities change. Usually younger individuals will always be more aggressive, more willing to take on risks. Then as you get older, like myself, I'm already someone who is a father of two. I have a mortgage. I have mortgage to pay. At the same time, I also have a car, so on and so forth. I feed more than just myself. So obviously I will approach it either having a more balanced approach or a moderate investor approach. But at the same time, I'm also familiar with risk. I know how to deal with risk emotionally, and at the same time, I know how to manage my position sizes, that in the event that something goes bad or turns sour or goes south or completely gets liquidated, I'm not going to cry over it, right? So these are the things that you have to identify. So the moderate investor is someone who is a little bit more balanced. It could be 50% in stocks, 50% in bonds, or 25% in stocks. Then you have 25% in bonds. You have maybe mutual funds 25%, 5 to 10% in crypto. Something like that. You're a little bit more balanced. You're okay to kind of diversify it into a number of asset classes. Okay. Now, the last, obviously the most straightforward, where every young individual loves to watch content and all the technical analysis is all done on that, is the aggressive investor. Young, usually they tend to be a bit younger. They love to take on risks. They don't mind putting in $100 on 100x leverage, that kind of shit. Now, that's just pure stupid, because obviously you don't know shit about what you need to do. You're just doing it because you're just trying your luck. And obviously you have okay, an aggressive investor there can be functional and dysfunctional aggressive investors. So meaning that if you know how to manage risk, okay, if you know how to put in the stop losses, you know how to put in proper position sizes, now those are the functional aggressive risk takers. Aggressive risk takers are always looking for growth, high risk products, or high risk, high beta, okay, high alpha, high beta, high volatility trades. Now, that doesn't mean that they don't have a strategy in place. Don't get me wrong. Aggressive profile investors they tend to be willing to be more open to taking risks. I think that's the right term to use. Now, you don't want to be the dysfunctional one or the degenerate one. In terms of maybe certain countries, people like to use the word degenerate, right? Where you just go into a particular asset class, or you want to try to trade the crypto market, you want to try to go on high leverage on the forex market, or anything. Basically, you have a rush from doing high level trades. That can be a good thing if you are able to just control your bet sizes, your position sizes, or you know how to put in a stop loss. So yes, so we have the conservative, we have the moderate, and then we have the aggressive, right? Now, so it depends on where you are, where you're at, and what is your overall financial objective. So personally, right, I am going to be just sharing the strategy that I'm putting out there for my premier group, and you can have a look-see. Okay? Right, so Manuel, cash is king, but for the next 18 months, you don't want to be just purely in cash. I don't really agree, because I think that cash needs to be deployed into the market in strategic times, in a strategic manner, and obviously in various points during the market in the next 18 months. So here's what I kind of wrote out, right? So if you kind of can see what I wrote, hopefully the it's not too small. Let me just try to increase the font. Let's see. Oops. Oh no, I can't increase it. Okay. So okay. The next 24 months are going to be rough, but here is how the opportunity is likely going to turn out. Okay. Firstly, I like to address that this is for the premier group, but I think it applies to almost everybody, especially if your job is secure. So back to my disclaimer, right? This video is basically non-financial advice, right? It's more for my personal strategy, sharing it with you, okay? And obviously, if you would like to, always approach a licensed financial advisor. Okay, so disclaimer done. So number one, please identify what kind of stock portfolio you want to create. There are three types: growth, balance, and dividend. So I think growth, meaning that they do not pay a dividend, and you are literally riding on the long-term growth of the company, right? Balance, meaning that in your stock portfolio will be a balance between growth and dividend paying stocks, right? We're talking about stocks only, guys. We are not talking about we're not talking about crypto today, okay? Dividend is very straightforward. Any stock that is paying a dividend and is able to keep up with inflation, because as I mentioned, we are going to go into a zero to negative interest rate environment, meaning that holding your cash in the bank is going to probably yield you zero, right, for an indefinite amount of time for now. And at the same time, you may even have to pay the banks so that you can keep your money with them. So that's probably going to be the situation. It is already happening in certain countries. I'm not entirely sure whether the US is doing that, but I know for the fact that Feds have already cut their interest rate from 0.25, and it's going to be the next few quarters, they're going to probably adjust the interest rate to zero. All right. So until the whole economy gradually pulls out of this shitstorm. Okay. Of course, the second part is create a watch list. Now, why a watch list is important? Because you have to narrow down, and stocks, by the way, there are thousands of stocks. There are more stocks out there than cryptocurrencies, okay? So when there are so many stocks out there, you probably don't even know which industry you should start off with, okay? What industry is going to suit your risk profile? At the same time, which industry is going to be for your portfolio, right? Which stocks are going to be? So you want to create a watch list. Next, the third point is observe the global indicators. I think global indicators are very, very important. For example, you want to see the GDP forecast. You want to see the unemployment, the unemployment rates in the next 3 quarters, I think. All right, to see what is the job situation. And at the same time, you want to see the overall consumer spending numbers. I'll be watching that as well. You're going to be looking at import-export, manufacturing indexes. These are things that you want to kind of take note of. Now, obviously, it's not necessary, guys. You can completely skip point number 3 if you're not someone who is familiar. Don't look at it. But it's the health of the economy. I think identifying the health of the economy will help you also to narrow down your watch list, right? And you want to narrow it down, and eventually what an individual has only that much amount of resources. If you can even dedicate $100 a month to stocks, it's already very, very good already. Because sometimes you are someone who is just starting out, you're very new, you just started work, and then after this happens, you're now thinking about where the hell am I even going to be finding my next paycheck to even pay for my rent and food. So like I said, guys, the main thing is your job security, your finances are in order, and thirdly, you have the liquidity to even do this. If you don't have the liquidity to do it, then just take it as a very nice video to watch over the weekend or something, just to improve yourself, to give you an idea. Sometimes, guys, the unfortunate thing is that even though we are having this seemingly every 10 years, sometimes you may not be in the financial position to be able to capitalize on it. Not only that, even if you have the financial position to do so, you may not have the knowledge to execute on all this. You just don't. So that was kind of me, right? I had a mixture. I had little knowledge. I can say I have no knowledge. I had some money, but I didn't have a lot of money. So that's the problem, right? So that was me being young. So your opportunity may have to come maybe 5 or 10 years later. And during this time, right, borrowing is one of the most high-risk things that you can do. Taking on leverage to put your money into the stock market, the bond market, mutual funds, trade in forex is one of the most risky things. And I only am worried for people who don't get lucky enough with their lack of knowledge, and obviously they're borrowing to do this. Their lives can be wrecked. In fact, it will set you back more than 10 to 20 years instead of bringing you forward. So sometimes, right, guys, going in with your little bit of hustle money, right, $100 to $200 is good enough. Yes, you may not be able to enjoy and create that life-changing wealth, because $100 to $200 done consistently maybe will yield you a 50k to a 100k portfolio, 5 to 10 years, even 10. Usually it's a 10-year time frame. So let's say 10 years down the road. Okay, it's not going to change your life. It's like, okay, sure, you can use that stock portfolio to buy a home, but it's not going to really help you take you to that 7-figure portfolio. You need to obviously have already six figures now, put it into the market, and of course, when certain stocks do 5x or 10x upon recovery, that's when okay, you finally made your first 6 figures or your first 7-figure portfolio. That's just the way the world works. Okay, anyway, back to it. I deviated a little bit. So, observe global indicators, okay, for the next 2 to 3 quarters of earnings for your watch list picks. Now, because since there are so many stocks in the stock market, right, you would be very confused, like, wow, because when it's earnings season, there's just a plethora. There's so many stocks that are just, you don't know which one to look out for. So the easiest thing is to create a watch list and watch out for the earnings for the ones on your watch list, and that's it. Okay, try to get familiar with what is important for that particular stock in that particular industry. Okay, next, point number 4. By the 6th month, start to have positions in those markets. So you're literally having 6 months to prepare, guys. You have 6 months to prepare. Trust me on this. I'm not able to guarantee, but trust me when I say this current situation is not going to be a V-shaped recovery or whatever shit all the youngsters are talking about. This is going to be your so-called V-shaped bounces, only to be a bull trap, and then after it will a continuation down, and then there will be a period of a nice consolidation period where you will have very low volume in the stock market because everyone is just have given up on buying already. There will be that point, okay? There will be that point where everyone has given up on buying, and then after that you will see this very quiet, slow, low consolidation period that everything is just flat, okay? Everything is just flat. No catching of falling knives. I told everyone in my private group, don't look at buying anything for now. If you want to do some swing trades, if you know how, of course, if you want to do some swing trades just to play on the bouncers, go ahead. They are obviously already pro enough to do that. They know what to do. I don't have to kind of teach them to do that. Okay? Yes, we are looking for opportunities to swing trade and everything, but what I'm talking about right now for this particular episode is only for the long-term accumulation and strategy for you to build a simple portfolio. You don't have to really monitor too in-depth into it. You just have to identify your risk profile, create a watch list. From there, observe the next 2 to 3 quarters for those particular stocks. Their earnings, of course, earnings will be announced in your list, and of course observe global indicators just to get a rough idea. Suddenly you just become a little bit more savvy. Now, of course, by the 6th month. Why the 6th month, Ryan? Because I feel that everyone needs time to learn. Because suddenly, if you have never bought a single stock in your life, I think as a human being, if you really want to do something, in fact, if you really want to do something within 1 month, you already start searching for a lot of information already. You will want to go all in and deep into it, because right now there's a lockdown. I mean, what do you have to do? Rather than watching Netflix and what's the latest Stranger Things episode, why don't you improve yourself? You are not making any money by watching Netflix, for sure. You're paying a subscription. You are kind of wasting your time, right? And sure, you have some banter to talk with friends online or some shit, or maybe when the bars start to open, you can go and talk about it. But I think that's just not productive. So let's focus on what's productive and what's good for personal development. And I think this is it. Okay, so by the 6 months, start to build positions in those respective stocks, right? It's very clear cut. I think it's very simple what I've laid out. Gradually and slowly accumulate across the next 18 to 24 months. So it's very crucial. And guys, like I said, you do what you are comfortable with. What you are comfortable to park your funds in the market for next 18 to 24 months without having the jitters. You need to look and do this with an iron fist and do this with a firm commitment that you're going to stick it through. Don't do it if you don't have the confidence. Just don't do it. Don't even try, because once there's the next leg down, which I always see will happen, the next leg down, it will suddenly wipe out 30% more of whatever you put in. Or even it could go up. Sure, everybody can be optimistic. Ryan, you're just so pessimistic. You're such a bear. This is based on experience. It's not whether I'm a bear or not. I'm not trying to predict. I'm not trying to call the bottom here. I'm helping everyone strategize and have a plan. It's just that simple. Now, your plan can completely different. You want to throw all your money in now, and then in the next 24 hours you want to try to get lucky and go ahead. It's your money at the end of the day. But I'm here to help folks to build something that I could not build at the time 10 years ago. But right now, since I already know what I want to do, I want to share that with everybody. So anyway, guys, I think that is pretty straightforward. That is the plan that I'll be having. Like I said, guys, if you're ready, if your job is secure, your finances are in order, and of course you are ready to do this, the Premier Group link, the Protégé Pro link is in the description below. But if you are someone who is still unfamiliar with the markets, you have not even started to open a brokerage account, you do not have a crypto account, guys, then stay at the sidelines for now. Observe more of my free videos. If you want, you can join the free Discord, and of course from there you can come in, have a chat, discuss a little bit with people who are there in the markets, right? But at the end of the day, you learn the most from the Protégé Pro group. Simple as that. All right, guys, thank you so much for watching. Stay safe, keep healthy, and spend more time with your loved ones, and focus on your personal development. And don't forget that, guys, this is one of those lifetime opportunities for you to really turn things around for yourself and for your family. Generational wealth, guys. Take care. God bless. See you in the next live stream.